Hello and welcome to our daily Forex market review. My name is Schimming, and this review is for Monday, February 25th. Now, of course, as always, I'm going to start the review looking at my currency strength index because this gives us a great bird's eye view of what's been happening to the market since it opened this week. However, during this session, I'm also going to do a direct comparison. I'm going to show you the superior nature of my charting mechanism compared directly to a standard time-based chart. This will give you an opportunity to see a dramatic difference in why my signals have been ahead of what you've been seeing. Some of you probably haven't believed some of the things I've been saying and why I've been pointing to and being able to identify the drop that we're now experiencing in the yen pairs. And I think this direct comparison will give you a very dramatic look at the market and probably change your opinion to some degree. As you know, Moody's did downgrade the UK on Friday late in the day, and we saw the pound open to the downside to start the week. But it's still been a story of the yen pairs as we have traded into and beyond the New York trading session today. Now, looking at the pound in pink down here on the CCYX, you can see it did start in a down move, and it has been the most negative trending currency overall. But the accelerator to the downside was the euro when it lost steam and moved sharply to the downside. You can see at the same time the yen came to life, and as I said, on the 12th of February we saw a significant event in the yen, and I've been pointing to that for the last 2 weeks, suggesting and trying to alert you to the fact that something has changed in the yen. I didn't know how short term it was, but if anybody was doubting my words, today goes a long ways to prove the point and change the tide in the yen pairs overall, which we'll look at. The dollar and the yen, the dollar, the euro, and the Swiss. Red for the euro, green for the dollar, and white for the Swiss started the week off strong. And after the open, we saw them moving to the upside, opposing both the yen and the pound. The market after that initial gap really went kind of lethargic, and that's very typical in a gap situation. As a matter of fact, there's a lesson I teach just how to approach gaps properly, why they happen, how they happen, and what the market's actually doing in response to that, and what you should be doing as a trader. In most cases, for most traders that I've come across, it's probably the opposite of what you do. And there's a difference between being looking at a more probable trade and having a very risky situation on your hand. Basically, it's the difference between profitability and the lack thereof, and something that we work very hard to help you become a better trader long term. But this event in the yen, a week ago Tuesday, on the 12th, we saw the yen shift tide, and there was a significant event that came into the pair. And I've been harping on this, maybe too much. On that Wednesday and Thursday, we saw continued strength in the yen, and then the Friday there was profit taking. Now, that was a Friday ahead of a 3-day weekend based on the U.S. holiday. We started last week kind of flat, still a little bit of profit taking in the yen, but again, on Wednesday and Thursday and Friday, we saw yen strength again. I will once again suggest that that is a significant situation, and today should prove that point to most of you. So if we look at the pairs, and remember, this thing has risen dramatically on the day, and so this is definitely something to start heeding and considering my words if you haven't already. Now, looking at the chart, I've been showing you this chart time and time again, almost daily. We've been utilizing this same chart, looking at a pure price breakdown of the euro-yen pair. I'm picking on the euro-yen, or I shouldn't say picking on, I'm utilizing the euro-yen because it has the greatest average daily trading range, looking at a 5-day, 10-day, 30-day, 90-day, and 200-day basis. The euro-yen is the most actively traded pair as far as trading range and volatility, and I think technical signals as of 2013. I think they've been the best in this particular pair. So you can see, you can go back to older videos and see this thing going back further. I've advanced it just a little bit because I have the trend line on here. We've been talking about the uptrend line, and where I think that the tide changed is when it set this 1, 2, 3 top up here that was met with divergence. The pair traded down. It's been in a transitional situation. I've been using the word transition very much on these reviews. Transition is different than a consolidation because the trading ranges are greater and it's really trading in both up and down opportunities. But as a trader, you really need to not only consider and anticipate all the possibilities, but ideally you would be looking at which way you would prefer. Now obviously I've been suggesting the short has been setting up, and the reason why, in looking at this on a pure price analysis, you can see that what was the uptrend line became a resistance situation. Now this is something that was not clearly shown in a time base. As a matter of fact, it was shown pretty late in a time-based situation. In some of your charts, depending on the time element that you utilize, you probably didn't have agreeance with this statement until today. And it took a significant breakdown in the pair for you to see this. Yet you can go back to the end of January, and I've been noting and pointing out the fact that this has been the opportunity. This first transitional period here, even though it still set a new high and a higher low, was a significant event because the drawback. This is where the pair started running out of air, and this is where I first started alerting traders and saying, we're not to the top yet because we're still setting a higher low. However, we're getting close. The pair is running out of steam. Now it still moves significantly, but again, we've come up in these ranges. This 126, 125, 124 would be the most significant ranges that we have up here at the top, and that one burst that went to 127.70 and set up the 123 top. The pull down there from there was significant, but it went right back up to 127, and you can see this most recent move failed to break above 126, and then after the gap it failed even to get back to 126, which is what I said in the review on Friday. If it moved up and failed to break 126, you've got to short this pair. You've got to look for the shorting opportunity in this pair. I made one trade in a yen pair today. It wasn't euro yen, but this goes for all the yen pairs. I made one trade on a yen pair today in the room and made 261 pips. I didn't even pick what I would consider the best pair to trade, but it doesn't matter. It was still an outstanding trading opportunity and one that rewarded me very well based on this analysis that I'm giving you right here. Now let's look at this a little bit further and why. You can see that each time it's moved to the upside, it has set a lower high. You can see that each move to the downside, this was a test of 124. This right here is where it went to 123.50 range, 40.50 range. This was what to 123. This violated 120 or even dipped below 123, which on the review that day I pointed out said this is below 123. That's significant. This came down almost to 122, and then today we've torn that apart. We've blasted below. We've got almost down to let me see, the low was 118.71. So we've even violated the 117 mark on the euro yen pair. The euro yen from the opening to rollover today had a trading range of over 651 pips. When's the last time you saw that happen? And it was really the downside move. That strength that we saw coming into the yen on my CCYX, the reason that we shorted the pair to be, the yen pairs to begin with. My bias and my preference has been shorting the euro yen, pound yen, Swiss yen, CAD yen. I've been saying this over and over and over again. When we're in transition, it does not mean that there's not a long trade available to you. Doesn't mean that at all, and I've said that repeatedly as well. But the fact remains that the short opportunity has been the best opportunity, and seeing this pair break down as a trader is the most ideal situation for us. If we start looking at this move, this was up to 126, this first move up. This one was when it broke to 127, and 127 was 127.70, 127.50. This comes back to that 127 mark after the great big drop down, which had divergence up at the top on the 1-2-3 pattern. On this triple bottom, it also had divergence and went back up and tested 127. Failed, pushed down, came to 125, went back up, could not get back above 127. Came down again, set a new low. This is where it was breaking below the 123 range just slightly, and then we went up, and 126 now became resistance. We've come down and tested almost at 122. It was 122.24 was the low based on our spreads, and then we came up to again, and it even failed to get back to 126, which again on Friday I said that would be significant if we saw that. And if it failed to get above 126 today, even with the gap to the upside, if it failed to get above 126, you've got to look for the short. And look what's happened today. So this has been probably one of the greatest days that we've had in the year thus far. and it's one that I hope you took advantage of. Now let's do the comparison, and let me show you, and if you can see after the 1, 2, 3 top, and you can see how the trend line, what was support, became resistance, and since this mark, that's why I have been very biased on shorting the pair. At the initial stages when it was still in trend, it was really a 50-50 bet. You could look at long trades and do well, you could look at short trades and do well, and trying to pick one over the other really came with a 50-50 bet. Once it proved that support was now resistance, it tested the trend line, that's when you had to have a bias towards the short side, and that's when I've been calling and repeatedly harping on the fact that you've got to look at this thing short. Now let's look at how you guys see things typically. Most of you use a time-based chart probably on MT4, and there's nothing wrong with MT4, but the fact is my charting software is the only program in the world that was not built with a time-based element. I'm looking at only pure pricing moves. So going back the same length of time, and I'm going back to where we mounted that trend line originally, the reason that a time-based chart is flawed is in a rapid price move you get elongated candles that pull your indicators and oscillators off, and a lot of times in an intraday basis you got to let things settle down to be able to get a good reading again. My charts disassemble a rapid price move, break it down, make it more legible, identifiable, and tradable. If we get into a slower price environment, your time-based charts go very lethargic, go sideways. You think, well, nothing's really happening. Something's happening. It's just not happening very fast. So where your time-based chart is failing you, mine reassemble the slower price data and again make it more legible, identifiable, and tradable. Now everything would be fine and dandy if the market always moved in a consistent pattern and with a consistent amount of volatility and a consistent amount of volume. Quite frankly, it does that about 25% of the time. The other, the 75% of the time, you're either dealing with rapid price moves or very slow markets. So and that's when you really need your charts to work. So when the market and you need to be able to read your charts the best, it's when your time-based charts are at their worst and they're working against you. And I'm here to give you a way and a system and a strategy to utilize in that system to change that and turn those rapid and slow market environments to your advantage so that you can make cleaner, better decisions. Our charts are more noise-free, and they definitely give you an enhanced way or a better way to make clean entry and exit decisions. Now that doesn't mean it makes trading simple. It doesn't mean it makes trading easy. It doesn't mean that you're going to eliminate bad decisions and bad trades, but it will put the odds more in your favor. It's going to let you have better decision-making opportunities and better trading opportunities because of the clarity. And in a pure pricing environment that I provide, every technical study, indicator, and oscillator and tool will work more efficiently, and it will in fact reduce the lag. So let's look at this. If you look at the trend line from that same point going back into early November, late October, early November, and we trend this out, you can see that the trend line, because of the rapid price moves on this chart, you can see the trend line really wasn't broken until today. So you needed a 650 plus pip drop in the pair to actually see that the trend line has been broken. Where mine was doing it over here at this point here on the chart, we had that indication long ago. And so the enhancement of being able to see that clarity is greatly increased to traders in our system. You would probably see that the highs were getting lower, and it looks like a consolidation on a time-based chart. Now, with all due respect, this is looking at a 4-hour chart, so I can step it back in time. You put this on a smaller time frame, and it's going to improve it. Every smaller increment you go to is going to give you the chance to disassemble the price activity a little bit more. But you're never going to equal what I'm showing you on my charts. You're not going to be able to do that. So I say, use them. Use them in conjunction with what you're doing. I'm not telling you to close your MT4 and not use it. I'm asking you to take a look at my charting methodology and my software and use it in conjunction with the tools that you're already using. Once you get used to the clarity and the difference, you'll find yourself using your old system less and less and less. At the same time, I teach you how to trade it. I teach you some proven strategies that will help you be more efficient in the marketplace. Now, one would argue that I could take this higher point and we could come over here and we could look at this point here, and trend up and find a higher trending point. And we can come over here. But there is no way from a trend line standpoint that I'm going to get the indication the same as I'm able to do it in my pure pricing technology. It's impossible to do. So the fact is that almost always my indications are going to be earlier than what you're seeing. And so we look at this. We look at a time-based chart so we know what you time-based guys are looking at. So we know when the herd is actually going to help us or hurt us, if you will. So we know how to take advantage of what's happening in the time-based world. As I tell my traders all the time, I have to remove you from the herd and then teach you to take advantage of what you used to do. It's not to be cold-hearted or anything like that. It's just a simple fact that if I can see something earlier than you can, then I'm in a better situation to take advantage. And by the time I'm exiting a trade, there's some traders getting into it. I'm selling my trade to someone else, or letting them buy it, you should say, and I'm taking a profit when some people are getting in with a time-based element late. Now again, that doesn't mean every trade I make makes money. That's not the case, but my win percentage is hugely successful and a very high win percentage consistently. And a lot of the difference is not only the 25 years I spent trading, but a lot of it is this pure price technology and how we approach the market. The currency strength index, we've modified the dollar index, made it more attractive for traders to utilize, and then put not only the pairs into a pure pricing mechanism, but also teaching you the strategies to utilize this so that you can take advantage. It is a substantial opportunity. So again, you look at how this is showing this, and I'll advance this a little bit just to give it a little bit clearer view, if you will. And so I've put the trend lines based on the different locations a person might be able to put them. But again, if you look at how we see these charts, then you'll see that from a pure pricing standpoint, this was very clear long ago. You're talking back in early February, and this was the most significant event, the 1, 2, 3 top that was met with divergence and then it failing after that. So we were already taking advantage of the shorts. And again, I had a fantastic short trade today. I don't really have to do much more for the week, and I've exceeded what my minimum expectations on the week. So the rest of it is really going to be taking a more cautious approach and trying to pad my week as opposed to having to try to look for every trade that's out there to make some money. So if this speaks to you, I want to have the opportunity to help you. I want to expose you to our charts. I want to expose you to our trade room. I want to expose you to our trading methodology and our training classes and give you the opportunity to trade with us long term. This is a substantial opportunity and a ongoing invitation I make in all these videos. If you have some questions, post them on the video. I'll answer them in a future session. And if you'd like to come into the trade floor, you just have to send me an email. We'll bring you in for a couple weeks, and our expectation is that you'll stay with us for many years and that you'll want to be part of our team of successful traders working together as a group to approach the market on a daily basis with moderators like myself and others that are working with the other traders in the room, making our decisions well known, analyzing the pairs in front of each other and working together, and then making our trades together based on the calls that I make and some of the other moderators make in the room. It's a tremendous opportunity, but you have to be able to understand it, because if I make a trade and you decide to make that same trade, that's your trade, it's not mine. So you need to understand and agree with why it was taken, and if you don't agree, then you don't take the trade. But I'm here to say I can teach you why we do it. I can explain very eloquently how we do it, when we do it, and the tools that we utilize to make these trades. And then you will also be doing the same thing, doing it your way on the pairs that you want to trade, learning from this proven set of strategies and money management process. So hopefully this speaks to you. I want to bring you in on the trade floor. I want to expose you to what we do long term, and I want to give you the opportunity to become a better trader. Send me an email, DerekSchimming@gmail.com. Someone from my staff will send you a questionnaire. I'll ask you just a few simple questions so we get to know you a little bit better before we bring you in the room, and then we'll have you in and let you sit with us and let you learn. So with all that, I hope you guys have a great week trading. We're going to be following these pairs as we have been. We're going to continue to watch the euro, yen, the pound yen, Swiss yen, and CAD yen. A rally at this point coming up and proving that this support line is now going to be resistance, something that moves up to 122 even. We've almost made it back to 121, which would be great. A move back up to 122 would even be better. proving that what was support was now be resistance, and then we can look at continued trades down. Something unique has happened in the yen pairs, and specifically in the yen, and you need to be able to take advantage of it. Let us help you, and I look forward to your emails and your questions. And as always, you have a great day trading. You know, before I end this video, as awkward as this is, let's do one other thing. Let's drop this down and let's look at the 4 yen pairs. Look how they traded down today. This is your Swiss yen trading down very significantly. This is your CAD yen. Look from the zone, my zone configuration, breaking through my zone here on the Swiss yen, breaking through the zone here on the CAD yen, setting a lower high, giving an opportunity. You look at the euro yen, breaking through the zone, setting a very significant opportunity, especially when it came under 124. And you look at the pound yen, the CAD, the euro yen, 651 pips today, high to low. Pound yen 493, Swiss yen 442, and CAD yen 373. It's going to extend the trading ranges on the averages. It's also going to stretch our pivots out. So we're going to have some wide pivot bands tomorrow and a lot of range to work from. So hopefully this really jump starts us for the week. So again, I hope this is of benefit and I look forward to receiving your emails. You guys, again, have a great day trading.